Welcome back again. Hope you enjoy our last video. Today we will be talking on investing in sustainable and ethical funds. As more people begin to prioritize their impact on the environment and society, investors are also looking for ways to align their investments with their values. Sustainable and ethical funds offer a way to do just that. These funds invest in companies that prioritize sustainability, social responsibility, and ethical practices. As a result, you can feel good about your investment while also potentially earning a good return. However, investing in these types of funds can be overwhelming, and it can be hard to know where to start. In this video, we'll provide you with a comprehensive guide to sustainable and ethical funds, covering everything from the basics of investing in these funds to what types of companies they invest in and how to choose the right fund for you. So, if you're looking to invest with a conscience, read on to learn how you can make a difference while also growing your wealth. 1. Introduction to Sustainable and Ethical Investing. Introduction to sustainable and ethical investing. In recent years, there has been a growing awareness and concern about the impact of traditional investing on the environment, society, and governance practices. As a result, more and more investors are seeking ways to align their investment decisions with their values and contribute to positive change in the world. Sustainable and ethical investing, also known as socially responsible investing, SRE, is an approach that aims to generate financial returns while considering environmental, social, and governance (ESG) factors. This approach goes beyond simply maximizing profits and takes into account the long-term sustainability of businesses and their impact on the planet and society. When investing with a conscience, individuals have the opportunity to support companies that are actively working towards environmental sustainability, promoting social justice, and maintaining high ethical standards. This can be achieved through various investment vehicles, such as sustainable and ethical funds. Sustainable and ethical funds are specifically designed to invest in companies that meet certain ESG criteria. These criteria may vary depending on the fund, but common considerations include a company's carbon footprint, labor practices, diversity and inclusion policies, product safety, and community engagement. By investing in these funds, individuals can have confidence that their money is being directed towards companies that are making a positive impact in the world. 2. Understanding the importance of investing with a conscience. In today's world, investing with a conscience has become more than just a trend, it is a responsibility. As individuals, we have the power to make a positive impact on the world through our investment choices. Understanding the importance of investing with a conscience is the first step towards creating a sustainable and ethical financial portfolio. Investing with a conscience means aligning your investments with your values and beliefs. It involves considering not only the financial returns but also the social and environmental impacts of the companies or funds you choose to invest in. By consciously selecting investments that promote positive change, you can contribute to a more sustainable and equitable future. The significance of investing with a conscience goes beyond personal values. It has the potential to drive systemic change by influencing corporate behavior. When investors demand sustainable practices, companies are more likely to adopt environmentally friendly policies, improve labor conditions, and prioritize social responsibility. As a result, investing with a conscience can be a catalyst for positive change at both the individual and societal levels. Moreover, investing with a conscience is not just about avoiding harmful industries such as fossil fuels or weapons manufacturing. It is about actively supporting companies and funds that are making a difference. By investing in renewable energy, clean technology, fair trade, or social impact initiatives, you can contribute to the growth of sustainable industries and encourage innovation in areas that benefit both people and the planet. 3. Differentiating between sustainable, ethical, and impact investing. When it comes to investing with a conscience, understanding the differences between sustainable, ethical, and impact investing is crucial. While these terms are often used interchangeably, they each have distinct characteristics that investors should be aware of. Sustainable investing focuses on considering environmental, social, and governance (ESG) factors in the investment decision-making process. This approach seeks to invest in companies that demonstrate responsible practices and maintain a long-term outlook. Sustainable funds may consider a variety of ESG factors such as carbon emissions, labor practices, and board diversity when selecting investments. Ethical investing, on the other hand, involves investing in line with personal values and beliefs. It often excludes specific industries or companies involved in activities that may be deemed unethical or harmful, such as tobacco, weapons, or fossil fuels. Ethical funds typically have a list of negative screens that guide their investment decisions, allowing investors to align their portfolio with their moral compass. Impact investing takes a more proactive approach by intentionally investing in companies or projects that aim to generate positive social or environmental impact alongside financial returns. These investments are often targeted towards addressing specific societal or environmental challenges, such as renewable energy, affordable housing, or healthcare access. It is important to note that while these approaches have their distinct characteristics, there can be overlap between them. Many funds incorporate elements of sustainable, ethical, and impact investing to varying degrees, making it essential for investors to carefully review fund prospectuses and disclosures to understand the specific investment strategies and criteria employed. 4. The benefits of investing in sustainable and ethical funds. Investing in sustainable and ethical funds offers a range of benefits that go beyond financial returns. Not only do these funds provide opportunities for investors to make a positive impact on the world, but they also offer the potential for long-term growth and stability. One key benefit of investing in sustainable and ethical funds is the ability to align your investments with your values. By choosing funds that prioritize environmental, social, and governance (ESG) factors, you can ensure that your money is being used to support companies that are making a positive impact on issues such as climate change, human rights, and diversity. This allows investors to have a sense of purpose and contribute to positive change while growing their wealth. Moreover, sustainable and ethical funds have the potential to generate competitive financial returns. In recent years, studies have shown that companies with strong ESG practices tend to outperform their peers in the long run. By integrating ESG factors into their investment analysis, fund managers can identify companies that are well-positioned to navigate emerging sustainability challenges and capitalize on new market opportunities. As a result, investors in these funds may not only achieve their financial goals but also benefit from the potential for superior risk-adjusted returns. Investing in sustainable and ethical funds can also help mitigate risks associated with traditional investment approaches. By considering ESG factors, these funds take a more comprehensive view of the companies they invest in. This approach can help identify potential risks that may not be captured by traditional financial analysis, such as regulatory changes, reputational risks, or supply chain disruptions. By actively managing these risks, sustainable and ethical funds aim to provide investors with a more resilient and sustainable investment portfolio. 5. How to identify sustainable and ethical funds. Identifying sustainable and ethical funds is a crucial step in aligning your investment choices with your values. With an increasing demand for responsible investing, it's important to understand the criteria used to evaluate these funds. Here are some key factors to consider when identifying sustainable and ethical funds. 1. Screening process. Look for funds that employ a rigorous screening process to ensure they invest in companies that meet specific environmental, social, and governance (ESG) criteria. This may involve excluding companies involved in controversial industries such as tobacco, weapons, or fossil fuels, while favoring those that prioritize sustainability and social responsibility. 2. ESG integration. Consider funds that integrate ESG factors into their investment analysis. This approach involves evaluating companies based on their performance across environmental, social, and governance dimensions, alongside traditional financial metrics. Funds that incorporate ESG considerations into their investment decisions are more likely to be aligned with sustainable and ethical principles. 3. Positive impact. Seek funds that actively seek to make a positive impact through their investments. These funds may focus on sectors such as renewable energy, clean technology, or social impact initiatives. Look for evidence of the fund's commitment to generating measurable positive outcomes alongside financial returns. By considering these factors, you can identify sustainable and ethical funds that align with your values and investment goals. Remember, it's important to conduct thorough research and due diligence to ensure the fund's claims align with its actual practices. Thanks for watching, and don't forget to like, comment, and subscribe to my YouTube channel. Thanks.